Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Thank you, Dan. Thank you, Marty. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. As you probably know, over the weekend there was a trade deal done with the EU in the US, which is big news. In fact, that news, the anticipation of it, contributed to new all-time highs this past Friday, which was the 25th of July, 2025. It is now Monday, the 28th. And there's an old saying in trading called buy the rumor, sell the fact. So that kind of sets up what we might be looking for early in the session. And then we, as they say, act accordingly. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. The TraderLab is a community of like-minded traders who've come together to leverage their collective experience. This is about the business of trading, understanding how the market works, why it does what it does, and how at times using structured, vetted trades you can get in alignment with the market and over time extract a edge, same as a gaming process where you only interact when your edge shows up, and then of course the outcome is random. It's also important to understand that the market's 100% random 100% of the time, so we have to solve for randomness, not for confirmation and certainty. I hope that makes sense. And again, welcome to the TraderLab. Let's get into today. Let's look at the condition of the market. And as you know, we had new all-time highs. Let's just make sure we got this in here. Yep. Friday, all-time high. And then in today's ETH, we made a new all-time high, which is here at the ETH high. The other thing that's important to know is that the overnight volume point of control which is the last auction, the ETH, where the buyers and sellers get to interact. The retail price was here. So that's an important level to keep in mind. In addition, we have Friday settlement, and we have Friday's naked volume point of control. A naked volume point of control operates the same as the ETH volume point of control. A volume point of control is high volume. And you might think a high volume, and it's very simple if you think about it. High volume is where most of the buyers and sellers agree to do business, and that's a fair price. However, this is an active auction. So the market is continuously rotating and trying to figure out what's too high, what's too low, and what's a fair price. And that's what gives us our rotations and our consolidations. And if the market finds that the buyers and sellers are no longer willing to interact at a specific level, we'll move to another level. So that's what gives us our rotations. So we open inside of yesterday's value and yesterday's range. But we're higher, we're above settlement. So higher inside of value, inside of range. So first of all, we have to look at a couple of things. Now, in the TraderLab, I've shared grid sheets of something called context. Context is really what's the condition of the market at the RTH open. And we kind of go from there. And so you start out with a perception of potential market mechanics. And we also start out with potential targeting. So first of all, if we open in range, in value, then we anticipate a two-sided trade. It is suggesting at the moment that not much has changed. However, we do know that in the higher time frame, the trend is up. And of course, we have the other part of this: buy the rumor, sell the fact. So is the price of the market right now? The question becomes, is the quote news priced in? which is why we had a trend day on Friday, or at least an up day on Friday. And what about today, right? So that kind of gives us our situation where we might have profit taking today. So let's look at statistics. So initially, we're going to be trading two-sided trades starting out with a lean to the upside. Kind of gives you something to think about, does it? So what do we do? If we open in range, in value, the market's in balance. So it potentially means a low conviction day, notwithstanding the higher time frame is up. So depending on your plan, you might look at selling it early, and then either we're going to take out week longs, or we're going to take out week longs and find our buyers, and whatever. So, and today was kind of you'll see as it develops, it was a bit of a it's a mixed bag. I guess it's the best way to describe it. So, statistics, let me give you that. So we opened higher in range, yesterday's high, in value, but higher than yesterday's close and settle, or Friday's. So let's look at our statistics. Taking out either the first hour's high or low, about a 98% probability. Taking out either the ETH high or low, a 97% probability. So we have that going for us. Getting to the previous high or low, 82%. And this is, now these next two statistics give one pause for thought. Getting to the ETH high, which is the ETH all-time high, 76% probability. Getting to the ETH mid, a 75% probability. ETH mid, ETH overnight volume point of control, ETH high. Now, the fact that statistics lean this way, they have no clue as far as buy the rumor, sell the factor, the possibility that we're going to run out of buyers and we might get sellers. And that's part of our thrill. Getting to the previous point of control, this, or VPOC, is 68%. Getting to the previous value area low, about 55%. That's this. And this is called a single. And a single is a low volume area from Friday where the market ripped through, and often the market will come back and check it. So for the upside, we have overnight mid, overnight volume point of control, ETH high. Coming down, we have the single value area low and this, a previous low volume node, and there's one more. Now, are we going to get yesterday's low? Yeah. Good question. Hold on one second, guys. Got to look at something here. Okay. It was covered up. Our ETH low was, I think, right around here someplace. Let me just confirm that. Right around the open was our ETH low, overnight low. So statistically, we got one of our overnight stats that takes out a high probability of getting the ETH high. So, and that's for openers. Okay, is everybody with me so far? How are we doing? And how are we doing in YouTube? How are you guys doing? Please give a like if you're visiting the TraderLab. Okay, so now let's get into the real time. Now, by real time, what I like to do is help traders understand market mechanics. If we get into real time, we'll talk about it. But this is really important. Okay. So, RTH open. So based on how we're opening, based on our context sheet, we're looking for two-sided trade with a lean to the upside. And however, what might we anticipate? Buy the rumor, sell the fact, and that is selling. So it's a two-sided trade. That's best I got coming in. But for me, I'm looking for shorts initially. So, and because I want to see the nature of the selling. So this is my first structured trade. This is called VPOC migration. And I test yesterday's high, RTH high. I'm at my value area high. And this was a difficult trade because of where we were. By the fact, difficult, they're all difficult in the sense of they're all uncertain. So, but I was prepared for it because I was thinking, well, you might get some profit taking. And then we got to see the nature between the buyers and the sellers. In other words, how do these buyers do? And what I was seeing was, so I get the buying. So I open here and I get my buying. Now I was looking for open and then come down. So anyway, that's kind of what I'm looking for. And this is my high probability target, this. So the naked volume point of control is about a 68% probability. So, and let's look conceptually. Let's just get back to a basic concept of shopping. This is the highest volume or the fairest price from Friday. Up on top at the ETH volume point of control is the fairest price from the ETH. Now, what might it mean if we open down here? Here's the possibilities. We go up there. Oh, it's too high, but we already might have found too high. Well, where is the retail price from Friday? Here. Is this too low? So it's too high, too low. What's this? Let's look at the same concept now. We're going to go down in time frame, but since this is the developing time frame, I don't use the clock. I just use the behavior. So I'm using order flow, and for me, it's fractals. So this is an auction. It's not based on, oh, I look at my watch and something has to happen in 5 minutes or something before I can do anything. The idea of having an order flow tool is to be able to get an edge, and that might mean reading the behavior. I don't use indicators, just a personal choice. I use behavior. So I'm the indicator. What I'm doing is translating a language, and order flow and participant behavior is its own language. So if we can learn a foreign language, and it is foreign, it might give us an edge. And at times it does, and other times nothing gives you an edge. You know, in other words, you always have an edge, but the outcome is random. That's really what I should say. We always have edge, but we don't have everything is random in the distribution of outcomes. So right here, I see my buyers. Now I'm looking for sellers. So, and it's either out the top. Now this is where we are opening is a really kind of, the way I was looking at it is this is like the edge of the universe. So if I come out of value, in theory, it sets up longs, but I'm kind of flirting, if you will. And this is my key. I get what's called VPOC migration. I made these up. I made it up because when I first started doing this, I observed behavior, and unfortunately, I observed tons of behavior. So I researched tons of stuff like a lot of us do. And very early on, I started seeing what I considered potential phenomena. And I didn't really understand what it meant. But what it really means is there's more volume here than here. Now, why is this important? If this is the fair price, don't forget, it starts at 0 at RTH open. And my buyers leave. In other words, they take the market higher. And I see this selling icebergs, and the buyers are absorbing the seller. So I'm seeing this, and now I have more volume here than I had here. Let's think of shopping. If I have more volume, and right now, don't forget, it started at 0, then this is the new retail price. So this is now too low. And if this is the new retail price, I'm looking for it to continue higher. Now, I'm not looking for longs. I have my jaw on the desk with everybody else because I'm at a very important level. Yesterday's high, the all-time high. So I know this is like a big deal. I break low. As soon as I break low, I take a short because I'm looking for selling. So what did we see here? Buyers, 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 buyers. I don't see the sell. You see, this is delta. So I'm seeing my buyers, but when I'm here, I'm seeing the sellers, and I'm seeing something called absorption. Why isn't the market going higher? Well, I got my buyers, but I got absorption. So in here, I'm just watching this, and I'm thinking, well, buyers seem to have the ball here. Where are my sellers? They're just getting, consumed here. And there they are, the icebergs. So right in here, I know I've got my buyers here, here, and you can see the delta. So they're reaching for it. Buy stops are going off. Who's selling this thing? Who knows? And the seller's taking the other side. So this is liquidity. Stops are market orders. Icebergs are passive. So whenever you have an aggressor, you've got to have a passive side. It isn't aggressor meets aggressor. It's aggressor meets passive. So there you are. Those are the limit orders, and those are icebergs. So I see my seller here. So, and I get my VPOC migration. So right here is a key moment. It's either going to do this to there and check it or continue. Right here, this is where my short is. My stop goes here. And then I am looking to come across. And I have my liquidity sitting here. So I put my scale here. And I'm looking to break down. That's me, first trade. So I get my scale, and I think I got you now, of course, and I see this coming down. Is everybody with me so far? So that was my first trade. Not saying it's good. I'm just saying, yeah, that's it. Yeah, hi, Jim. And everybody, welcome to TraderLab, by the way. This is the business of trading, and this is called structured trading. And what structured trading is specific trades that you vet, that when they show up, you show up, as long as it meets your parameters. And if you do the work, which is the part none of us like to do because, yeah, it's work. Let me show you this. Then you know where your trades are going to come. And then you're just sitting here working on your crochet until your trade shows up. Now I'm going to show you this because this kind of took care of my short. So right here, this liquidity is resting. And this is our location, settlement, naked VPOC. And then I'm looking at coming out the bottom. And my goal is to come to there and lower and there. So that's my trades, okay? So when I see this, now what's important about this is a couple of pieces. I know this is in here. And what else do I know? I have a high probability of getting to this. And what else do I know? This was the fair price or retail or highest volume price from Friday. The nature of the market. Now I'm going to take you down in fractal. What is a fractal? Think Russian dolls. Now the whole thing about this is narration. If it does this, then that. If it doesn't, then what? It goes like this. If this is too low and the market breaks away and the VPOC shifts, then that, new retail price. If it's still too low, this. If not, then what? That. If it does that, then what? That, you see? So if I get, and it doesn't have to do anything, by the way, part of the thrill. Let me show you another entry potential, by the way, on the short. This is called the variable high volume node. Now, this is based on a consolidation right here. Sellers are there. The buyers are here. The fair price is here. Let me just throw a little line in here for you. I just want to do this to help you visualize what's going on. Where did the sellers take over? Let's look at this. Now, to see this in real time takes a lot of practice because we're so focused and we can't really multitask all that well. Let's come back here because this is really what takes a lot of practice. Because you're going to be looking here. Well, you can't forget what happened right here. What did happen here? Let's talk about the story. Retail price in the developing time frame. So we all agree this is the new price. What happens if you go to a store and the price is too high? Look where we are. Yesterday's high, yesterday's value area high, and we're either going north or south. Good luck with that. But what is this? This is an auction. Too high? And the low volume is out here. Too low, too high. This is the new retail price. Think of this like a store. And right here, the sellers took control and we broke low. So this is my short. But what do I know now? I know my buyers were here. There's the icebergs. They were buying right here and here. And right here, it changed. It breaks here. And this is my short. Just luck of the draw. I don't know anything until I have a trigger. So now I have a trigger and my outside edge is here. Now this does mean something. There's your test. So you have choices. You jump on this thing and you're going here, or and you're coming back there, which was, let's look at the rationale language. This is too low. This is too high. This is a trigger. This is a short. Or back here is a short. And the reason you would take it, if it's in your plan, is because of this. And then I have this liquidity come in the book. So I'm now aware of, so I get longs trapped over here. I get my short. Now I have a couple ways in. I can sell this. My stop is over the high of the day. Teeth chatter. I can sell this when it comes back. And it's a structured trade. I'm not saying, you got to vet everything. Where am I? I'm back inside of value. I have this open below, and I have this in the book. So my targeting is here. So that's my short. And this is an entry here if you didn't get short, because you still have statistics, you see. So this could be your trade. You could just be hanging out with this thing. And there's your target, okay? So I got out here, and when I say got out, I got to scale. Now, right here, I'm looking at this, and I'm going, well, this is interesting. I have my retail price, remember, shifts down here. So the language is too high. So I've got my resistance here, and I have this. When I see this, I'm now thinking, well, if this is too low, and I don't know, don't forget, I'm clueless, then the possibility is to come back here. So this sets up a different context, and this is maddening. It could do anything, right? Remember, the higher time frame trend is up. So what I've seen so far is I'm not overly impressed with the sellers. I would think there'd be a lot more aggressive selling in here. And I'm back inside of value. So I'm thinking, okay, I'm back in two-sided trade. So it's kind of up, looking for the response of selling. And so two-sided trade. I'm in value. According to my sheet, let's come back to my context sheet. Are we in range? Are we in value? Yes. What does it mean? The market's in balance. What do? I tried to trade reversion. That's two-sided trade. And it's tricky because what's your time frame? So anyway, down here and then, actually to there for me, but this was my obstacle. And then if we clear this onward, if we don't clear it, then mean reversion. It's one or the other, and I don't know. I couldn't tell you. Right here, so I have this, which I mark on my chart, same as I marked that. This is a liquidity trigger. There's the buyers. And right here, my teeth are chattering because I have to take this out. Now, what is this buying? Are these, quote, longs coming in or just short covering? Wouldn't you like to know? So I'm looking at this. I'm going, all right, I got my sellers. And now I'm thinking, well, it could come back here. As long as it stays under here, I'm hanging in here. I come down to where my buyers were. Sell stops coming out. Buying icebergs. I see you. And now what? I get a sweep. Now this is disturbing for me. You can see why. So right here, don't forget. And what's this? Let me extend this for you. This is language. And I understand, this is, will make you nutty. But what do I know? My sellers are in control from here. My sellers are still in control over here. What do I know? My sellers are active here. What do I know? My buyers are here. So I have my sellers, my buyers. So I'm going, well, and right here I'm thinking, oh, it's over. But I have a plan. I follow it and, go down with the ship. So buyers are here. Absorption. What is this? A trigger. Where's the microstructure? Let me show you. Now, I'm showing you things that And this is up to you. What I do is I anticipate behavior at locations. I don't have any clue what'll happen. So we're like, we're all the same because nobody knows. So your job is not to know. I think your job is more like to know where something might happen, locations. And then you can look at the behavior at a location and either, you see what you're looking for, or you go, oh, that was interesting. What happens here? This is the retail price in this structure. It's here. Outside edge. I'm not paying that. Outside edge. What happens here? So I have my buyers, right? And of course, I got my buyers here, my buyers there, buyers going, where's my resistance? Isn't it there? Buyers, oh my goodness, it's over. And this is where you bail out of your trade because of emotions, because you don't want to take a stop. But if it doesn't fail, why would you get out? If that's your plan. Or, let me give you the or. When you have this, you exit and you get long. That's possible too, for mean reversion. Either one. So I'm still looking for it to come out the bottom. So I know this is my outside edge for a short. My high volume is here. Let me show you a trigger. Just want to give you a little something to look at. And you should screenshot ideas like this. Now, I'm not saying these, would work for you. You have to kind of find your groove, whatever your groove is. So, and I don't know this until hindsight. Let's remember that. Because right here, it's going up, right? But my high volume is here. So think of this like a store, and it's an auction. You go to the store, and I always like to think of it Saturday night to get your pint of ice cream for the movie. It's a small store. It's a convenience store. It's not your big store. It's your little store. But there's still shoppers in this store. And that's what's going on here. What's too high? What's too low? Buyers will buy it here. Sellers will sell it there, which we don't know until we get below the buyers here. And here it's still questionable. Buyers are there. Sellers are here. Sellers are here. Trigger. What makes it a trigger? We have taken out the buyers and we get below them. Now, where's the high volume? It's here. There it is. There's the node. What does it mean? I'm not paying that. And are you sure? Yes. Trigger. So you have a short here. You have a short there. Outside edge. Same trigger that I showed you before. I just want to show you method. What did I say? Method to the madness. Same trigger. Resistance. Now I'm in a fractal. Trigger. Resistance. Trigger. Resistance. To where? Back here. Is everybody with me? I'm just showing you how you can narrate this thing. Are you guys with me so far? Stuggy, can I explain how you identify change of context? Well, I have a context grid sheet I created, and it's available to everybody in the Bookmap Discord TraderLab, as well as a library of webinars and document section, and of course the TraderLab community. There's a link in the bottom of YouTube, and what I'm doing is I've created process, because there needs to be, if we're in a random environment, well, let's accept this thing as random, because you don't know where one side or the other is going to interact. We don't know. So the best thing I found was to try to narrate it and define change. So I don't know here that we're not just going to take out the high of the day and go to the moon. I do know where the sellers were previously, so that gives me something. And I know the buyers are here, and I had a sweep over here. So you see how the buyers came here for it, and that's a trigger. And then notice what I'm doing. I'm coming back to the same process. Now, this was a liquidity trigger and a pullback and a sweep up to resistance. And what's this? Support. Now, let's look again. So anyway, you have short, and as far for me, I'm still thinking short. Just me. What do I get again? Another sweep. I have to get through this. So, and I'm only working the shorts in here. but I'm thinking, I got to get under here. So this is my support. Okay. Because of this, because of this. Now let's look at what starts happening in the order flow. First of all, we had this come in, which again, who knows? It skews the book. So what happened over here? We had buyers here. What's going to happen if we come down here again? Are these the question I always think when it comes to iceberg behavior and absorption? It's not rigid in the sense if we come here and I know these sellers were absorbed, there's the icebergs. If I know that, I don't know if we come back, how far we might come, because we can very easily come under here, and the buyers that were here can resurface again and go, oh, really? And absorb, and it can come through here into stops. So that's what I know. I don't know anything else. But when I get the sweep, this is in my mind, because I had it here and you see the reaction, I get it again. Now, right here, if I can't break here, there's trouble. And then it sets up something called mean reversion. So let's look at that. This is the mean. So this is mean reversion. So right here, this is reversion. This is resistance. I come back, I get this, can't break, and look at this. Let's start looking at the order flow. Look at this. Now, when I see this come in, I get a little disturbed. I see this jump in the book. I get extremely disturbed. Now, let's look on the other side. This is a bracket. Look at this. 117, 109, 112, 109. This is like, hello? This is an algo. So what is this trying to do, this thing here? Well, do you think maybe, now this is always a guess, that the buyers here, these icebergs, who got long and who are absorbing here, and notice how we came under just a little bit to pick this. Why did it go up from here? Two things. Absorption. The sellers were absorbed. And where was my original long side location? Wasn't it right here? So I'm going to put a little line in here just to remind us where it is. And again, I don't know. This is a big deal. So now I'm going to put a little box around this thing because I'm not, hopefully, going to forget. And what else am I going to do? I'm going to put a box around this one. Maybe not. Let's try this again. So now I'm looking at this and I'm going, oh boy, now I got potential trouble. So right here, when this comes in, here's what you got going. Too high. Let's do it this way. Too low. Too high. Too low. This is called mean reversion. The long would be to here if you took it. For me, not a long at this time. This anticipated. Where's my resistance? Let's come back. If you do this, drawing these boxes, you're going to start being able to bracket out support and resistance. Remember, let's go back. Well, selling was there. This is a short. This is a short against this. The break is here. This sets up a short here to there. This sets up and where do we come back? Here, a short to there, or a long to here. Whatever. This comes in, manage your trade, or you're just trailing a stop, and whatever you do, you do. Come up here. So this is where your plan comes in, and it's either a long here or a cover. It's all up to you. But the fact we can't get through this is trouble. And this is the best shot you got right here. This jumps in, that skews the book, and you get this. And now they're on the other side. So now we're taking everybody out who's short. Okay. So now for me, I'm outside of value and I have to get long based on my plan. Not saying it's a good one. I'm just saying it's the plan I got. So this is gone. And We pull back. Let's look at this. This comes in again. It's probably the same player, same location. What might that do? Skew the book. So here, for me, I took a long because I'm perceiving that I'm coming out of value. And my plan says if you're out of value, you trade in the direction. So that's what I'm doing. And this got nasty for me. So here I got long, and I got taken out of my trade. Just, And now I'm going, oh, great. Back in two-sided trade. Okay. Now what? Back in value. I still have targets below, and I have targets above, but this is some pretty aggressive selling. And it looks, my buyers were doing a pretty good job, I thought. So I was okay taking long and getting taken out. So, and it's not it's just, you try to get risk neutral. And I tend to just go for 3 points or so, depending on my entry. And then I was actually looking for, at the time, where was it? Trying to see if I have a location here. Well, I was looking for the overnight mid, as a target, and then maybe higher, but because of the statistics, and the trade failed here. So that was that. Okay. So I took a long, and then when I fell back in, then it was sort of, I'm back. I'm still in balance. Now, let's look. When I break under here, so this is now too high. There's my resistance. I'm going to show it to you. And I can't, I don't get all these things because they're just too fast for me, And if I don't have location, I just wait for the next bus. I certainly feel emotional stimulus. And this is a trigger. Now, you can use triggers a couple different ways. It's right. You can see where the sellers took control. It's really right there. Because this is, going up. Buyers are here because I went higher than this absorption. This seller was absorbed. And then the buyers are here. As far as I know, right in here, I'm going up. When I break under the buyers that were there, that's a trigger. This, I have to get back above this right here. Sellers are here. Buyers take the shot. This is the shot right here. And then, boom, break. So now I have to turn the barge around, and I have to go look at where everything is. I know this is now too high because my sellers took control. My buyers ran out of gas here. And I also have this level over here that I can be looking at. So my sellers are here. So this is my resistance. See it? Then what? Back here. And this is still in the book. So this is a problem for me. So I need to be getting risk neutral. I'm just going to show you. And then I have target below, which is a single. And I just lost what hold on. One moment. I want to move this over. Because this is in the book. So if this is in the book and this is support, this is where I got to get risk neutral. So if I'm trading, and this is called mean reversion, underlining the term mean, because it's outside in. Okay? So it's two-sided trade. No trading in the middle. And this is hard because where's the outside? That's the challenge with this. Reversion trading is rotational. The way you know you're in balance, besides seeing this kind of stuff, is the volume point of control for the developing time frame is in the middle. The VWAP in the mid are on top of each other. And this is what the profile looks like. Balance is just a symmetrical, it tapers on each side, too high, too low, retail. And it's just doing this. Now, the thing about balances, if you break out of balance, it can become directional. So I'm inclined, since it's two-sided trade, I can trade from either side. My thesis for the day is really to lean more on the short side, but it doesn't matter. I tend to pick one side. I did take a long, and that one just didn't do it, and then I come back here. If I get under, and then I test what was too high. I have my structure built out, and that's why I do this. Otherwise, I'm going to get myopic. I'm not going to remember. And it's a pain to do it, but it's more painful to take losses. So I kind of go, well, okay. Now, so the long, no bueno. Now back here. So we're back inside. Now, right here, this is called the IB. Now, the IB is the first hour's high or low. And we have a statistic for that. I know you wrote this down. And it is a 98% probability we would take out the first hour's high or low. Well, you will notice that we did not take out the first hour's high. And if we get too high, and now we fall back under here, and we know there's sell stops under here. So all these buyers in here now have their stops here. So this is a good place to either exit any longs, or for me, I took a short here. And it's called the IB continuation trade. And the idea of this trade was to go to the single and then to come down here. So this is to this liquidity. So this is the last trade I took. I took short. I got this, thinking I got you now, and not so much. And then got taken out, and that's that. Well, let's look where we come. Now, I haven't seen this, but I'm going to narrate for you, give you some ideas. So, do you have any questions? By the way, this is your resistance. If we come inside, then we have a possibility. It's called the IBF, and it's a reversion trade. And the way it works, first of all, this is the IB continuation. This is structured short. The idea is to come back down here, actually, and maybe lower, but we'll start with that. If you come through this level, it sets up a long to there and possibly back here. Okay, so so you have a short from here to there. This is a target, and then down. You'd be taken out. And now, when I say you're taken out, you either have a trade management process, or you're just, you're hanging out and you scratch the thing. It's all up to you in your process. We have another trade in TraderLab called the IB failure. I made these up, who knows? And the idea of this one is, if we're in two-sided trade, and what's important about this is an outside edge from Friday. Let me explain what an outside edge is. When you look at these distributions, that's what this is, this kind of, and you get to an outside edge, that's called a low volume node. If we are, Friday, we're in an urgent kind of movement. In other words, the market was very directional on Friday. If it doesn't come back to these areas, it leaves that low volume node, or if it's specifically very urgent, it becomes something called a single. And this is a market profile term. One moment. All it means is that in a 30-minute time frame, this is market profile, not volume profile. Market profile was time-based before we had volume. They were called TPOs, 30-minute brackets. Think a 30-minute bar chart. And if that 30-minute didn't come back and fill in this little price gap for the 30 minutes, then, so we made a higher low and did not come back, that is called a single, because there was buying activity that kept it from coming back, and that was aggressive buying. So we note that. So that's why this is on the chart. But the also in these auctions, outside edge is a low volume node. So it's a low volume node. If I fall outside, this is a low volume node, and the outside is here. So the market rotates. If I leave an area, it suggests that this volume, let me show you, I'm going to take you down into Fractal, just so you can kind of see so you get a little sense of what you're looking at. Sellers are here. The buyers were absorbed. The buyers are here. Micro high volume structure. I'm going to draw you a little, you're going to see me do the same thing over and over. Now, training yourself to be able to read this in real time is a different animal. It takes a lot of practice and screen time and screenshots, because this is a story. This is the same as this little store for the pint of ice cream up on top where it was too expensive. Saturday night, I'm going to watch a movie. Well, I go down to my convenience store here. Location, location. Remember, this is not necessarily happening in the middle of nowhere. I don't know what will happen. Right here, I've got, what do I got? Sellers, buyers. I go lower, too high. I get a sweep. Teeth now chatter, because often I see a counter rotation. This is the Global Plus, and this is icebergs and sell stops. And, so icebergs, sell stops, and sweeps. Very cool. And right here, going to zero. What happens here? These sellers are absorbed, and there's no way to know until hindsight. I got a little trick to share with you. Little trick of the trade. It's the only thing I use from my days with indicators and trading systems. And that is, these are sell stops. Sell stops. What do we notice? I'm going lower, and I got less of something. Only 3 sell stops. Here, 6 sell stops. So what is that? Don't we call that divergence? Now, I don't know. Why wouldn't it keep going? This we don't know. What we know here is, right here, I have sellers, because this buyer was absorbed by that iceberg. And again, no, don't know. Break high. What does that tell me? The buyers are here and there. The buyers took control here. My sellers were there. This is a breakout of a trigger at a location. This is what's important. Location, location. Now, my micro high volume is right there, this little area. And this acts the same as this. In a developing, call it higher time frame, and depending on how you define time frame, and I don't, this is the retail price for the day, highest volume, right there. But in this little thing, it's the same process, but instead of being the whole day so far, it's right here. This is called fractal. And a fractal, if you want to imagine what a fractal is mentally to relate to it, it's like a Matryoshka doll, a Russian doll. They're all the same. They're inside each other vertically. Well, you guys think of time frames vertically. I do the same thing, but I do it based on the auction, not on the clock. That's the difference. So how long does it take to do this? If it only took from there to there, which might be 3 seconds, that's good enough for me, because now I have an edge over other traders, and it happens here. Now, right here is my trigger. Now what I know is this might be, and remember the word, might be too low. What else do I know? A sweep that often suggests a counter rotation. What else do I know? This is where my last short was based on this. It's called the IB continuation. So there to there. And then it's either out the bottom or wherever. Who knows? This is a caution. I know this. Before I get here, I see the sweep. I already know I'm on alert for a reversal. Don't know. There's a trigger. Now what I know is if I rotate down, this is possibly support. So where's my support? Where the buyers took control and where the sellers were absorbed. And I have another sweep. See the behavior? So isolate this. This is what I suggest to developing traders in TraderLab. And by the way, we're all developing traders. Doesn't matter how long you've been doing this. You need to be screenshotting this stuff and annotating all the pieces that fit together, because this really is the magic, I think, of understanding market mechanics. We can't predict what will happen. We might be able to, at times, identify where it might happen. And then by using tools like Bookmap, order flow, and whatever else you have that creates a edge, that's what you deploy. And then you're monitoring the market for change. Your change, this is the warning Will Robinson moment. This is the trigger. And if we don't take this out and we have this, you need to be managing your trade. You'd be out, depending on your trade management process. Resistance. So now we want to see what happens here. Right here, we have a buy sweep. Remember, sell sweep, counter rotation. Buy sweep, looking for counter rotation. If this is going to hold together, what does it do? It breaks high. What is that? IB continuation. Where's the target? Here. Two-sided trade. You want to hit yourself with a crowbar a few times. Notice where we come. Back here. What is this? IB continuation. IB continuation long. Back here. This is all structured trading. I'm in real time now. If you have questions. So how many trades would you have? If you're in TraderLab and you're just patient and you wait for your trades that you vetted, you don't have to have a lot of trades. What's this here? I'm getting a question. Chris, hi, Chris. When you say in value, what exactly are you looking for? Okay, value based on market profile, the concept, and this was really Peter Stottlemyre, who actually created market profile and shared it. He was a grain trader at CBOT, and he started statistical background, and it was really about standard deviations and the mean. In other words, what's fair, where's high volume, and where does it tail, or where does it taper off? Well, in the idea of a standard deviation is really about where 70%, theoretical 68, but let's say 70% of the volume takes place on any given day, because most of the business is done in that range. So from Friday, the value area high was up there, and the value area low, which was a target for today, is down here. And if you're in value, then the market tends to trade in this area. Now, it can do anything. So that's the other part of the thrill. It doesn't have to do anything. But what we know is this was an outside edge because of, which I already explained. And then this outside area here has potential, which it may or may not get to. Also, we know, just to keep us all spinning around, is the higher time frame is up. And we might only get weak longs out. There's no way to know. So in this context, if we came outside and we did not get to value area low, and there's no way to know, so we have to always know we don't know. Remember, 100% random. Then we know this might be too low because it was an outside edge from Friday. And we know now that we have our liquidity here, this might be too high. The other thing we know is if we don't fall out the bottom, we can come out the top and maybe come back. If we get through this, come up here. So it's two-sided trade. And you'll notice what we're doing. We're doing what's called mean reversion. Outside in, outside in, outside in, and then outside to the next level, back in. Mean reversion. So this is fractal, and think of it as multiple time frame. Value, though, is where most of the volume took place, to answer your question. And the nature of the market is to trade and test the outside edges of value. When you're in value, it's two-sided trade. So primarily we're in a reversion environment unless we come outside. I hope that makes sense. So right now it's two-sided trade. So it's outside in, and then, if we come up, outside in, outside in. So it's this. I don't know if that makes any sense for anybody to trade. I think at some point you have to look at it in the sense of what qualifies your trade. The thing about the auction is the auction is a generic or a rotational process most of the time. And most of the time, the market's in what's called mean reversion. That's rotational trade in all time frames and fractals. This market right now is rotational. So if you're going to trade it, and again, it's subject to time frame, and, as day traders, we kind of trade rotations, if we get on the bullet train, then you can trade one direction. But so far, this is two directional trade. So it's outside in, but this is the in. So your range, if you get long, if you didn't get a long in here, or at least cover your short, then you're doing this to there. Look at the range, 3 points, and it's like using a shoehorn. You can do it if you have an edge in it, or you just sit back in your Barca lounger and work on your crochet because the risk reward might not be there. To trade this, you really have to be pretty good at what you do. In other words, you can't be hesitating looking for confirmation and buying it here, because this is where your obstacle is. So it's outside in and then outside in, very difficult trade. So then you could just be in park. I hope that makes sense. And I hope I answered your question there. How we doing? So the context is rotational trading or mean reversion. If it doesn't fit, you have no trade. If you're compulsed, I'm using the word compulsed, to need to do something, you have a problem. It's not one we want, it's one we have. Here's a little visualization for you while we're talking about, quote, the problem. What is the problem? It's compulsion, the need to be active. It's FOMO. We all have that, by the way. We need to recognize it, and we need to build processes to try to work with that problem and reduce it. You'll never eliminate it. But let's talk about who is this. Let's give it a name, and let's actually visualize. And I call it Hyde. Jekyll and Hyde. Hyde's the other personality, if you will, in Dr. Jekyll. Dr. Jekyll was a scientist, was very, professional. It was just the facts, the facts. Hyde was unbridled emotion, the lunatic under the hood. So there's Jekyll and Hyde. Now, if you guys have ever seen these little graphics of somebody sitting on your shoulder, and I don't want to go into a religious kind of a thing, but, like the devil is speaking in your ear, tempting you. What is that? Well, it could be a lot of things, but let's call it Hyde. So there's little you, and you might call him, let's give little you a name besides Hyde, the lunatic, the other part of your mind, the reptilian brain. Let's call it you, me too. Let's give it a name. It's me too, or little you on the shoulder. Little you is always speaking to you. That's the language that's always running through your brain and your head. That's Hyde, or little you, because it is you, and it's part of your wiring and your a reptilian brain. Oh, you could have done this. You should have got out there. Little you is brilliant. I better get in here before I miss it. And you buy it here because now you're waiting for certainty. Little you, I'm not sure. Little you, oh, we better get in. Resistance. Then what? Where's your stop? Under here? You see what I mean? That's little you, or me too. So let's call it me too, because it is with us. It's me. I have me too, you have me too. So me too, or little you. And it's in your ear. Visualize what's on your shoulder. It's important to separate it from your intention and your consciousness, because this is under the hood, polluting your mind, creating doubt, creating And because of the fear and the uncertainty, which triggers little u, me too. And remember where me too comes from. Me too comes from the primal wiring. Is there a saber-toothed tiger there behind the tree? Well, let's be sure there isn't before we do our thing. So that's why we avoid risk and look for certainty. And then when we're certain it's going to go higher, because now we don't perceive risk, now we perceive that we're missing it. So it's FOMO. So we do everything that is going to take us out of the business. That, I think, and I always say this in TraderLab, I believe anyone who comes to TraderLab can learn how to trade if they do the work. Being able to trade is a whole different element. And being able to trade is going to be your biggest obstacle. And it takes more than willpower. Because if it was willpower, I would have overcome these things much sooner in my development. And I've been doing this 46 years. And I still will make errors. Not many, thank goodness, but I still make them from time to time. And it's because what happens is, if on my conscious level, if I have a distraction or I drift off a little bit, the lunatic, me too, is still operational and is always speaking in my ear. And then when I get that moment, all it takes is a moment, me too, little me, takes control, and I click the mouse when I have no reason to be doing it, you see. Are you familiar with me too, little you? After taking out the singles, Charlie has asked me about the singles. Well, for me, this is a tough day because it's rotational trade, and the range is an issue. I like to trade for range. And my target after this was this, value area low. Now, I don't think we're going to, I don't know. When I say I don't think it's going to do something, it doesn't mean anything. It means, well, right now it doesn't look like it'll do it, and if it changes, it will. This is my target primarily in here for today. Yeah, down in here. This is the target on the short that I took that went to here. I was going for this. So this is my next target, not a trade recommendation. I'm clueless. Yeah, I can't tell you what's going to happen. I'm not in the business of what will happen. I'm in the business of maybe. Maybe it'll do this. Maybe it'll do that. Here's what we know. Let's go back to what we know. There was news, bullish. We got our buyers this morning, which I thought was interesting because I thought the buyers were doing okay, and I was kind of surprised they did as well as they did, because my scenario for today was shorts, but if I see longs, I got to take the longs. So that's, it's kind of what I do. I go, I don't know, because I have to be flexible. The other thing I need to do is I can choose a side and just trade one side, and when it reverses out, I'm using the reversals for trade management, and I'm not getting long. I could just be taking counter rotations and stay on the short side. You don't have to trade both sides. It's all a function of time frame. So, for me, today is, you could trade either way today. It doesn't matter because we have structured trades, So we have shorts, here. Didn't get there. Too bad, Tom. Come back here. Come in here. IBF. Reversion. Come back here. Support. Come back here. Reversion. You see what's going on? So if you took only one side, and let's assume it's short. It's up to you. You could trade only longs too if you want. You just take the long to there, the long to there. You could do that. Me, it's shorts. So it could be I can take longs or shorts, but I'm inclined that the market is long. Write this down. The market goes up to go down, and the market goes down to go up. What am I talking about? Yeah, the market goes down, so that means buy stops to go up, squeeze, and it goes up to go down. In here, sell stops to go down. Where do we get the stops? Where are the stops? Under here, and under there. Well, if I come down here and get my stops coming out, thanks for playing. You get a coupon to the buffet, and I get my absorption. Where might I go? This is the reversion. Back to the mean. always say, and we laugh about this, not too many times, in TraderLab, it's mean. Where's the outside edge? Well, in rotational trading, you cannot trade here. You got to trade outside in. You don't trade inside out. Because where's out? Because it's a reversion. It's a reversion. But if you think maybe, and this is what I was going to say, the market goes up to go down. The market goes down to go up in all time frames and fractals. The market goes down to go up, goes up to go down, goes down to go up, goes up. We don't know about this, to go down. But this is support. Goes down to go up, goes somewhere to go down, goes down to go up, goes up to go down. Now let's go to the higher time frame. What have we done in the RTH? Up, 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 up. What does that tell you? The market is long. What happens if the market gets lopsided? It's like a boat. If everybody is long, where's the fuel? It's below. Does that mean maybe you should be thinking short versus long? Or either one? See, it's time frame based, if you will. And for me, it's fractal. So intraday, I'm trading either side, both sides, doesn't matter. And I'm more inclined to sit in the Barca lounger, so I just tend to go with one side. And let's say I'm only trading shorts today, maybe, which is not necessarily the case, but primarily. And that's not a recommendation. When I get the longs, it's just as well for me. I can be out of the short. So I can keep taking shorts because the value area low from yesterday, let's look at our statistics. I know you do this. So we got the value area high. So the value area low has about a 55% probability. And we don't have a lot left here. And are we going to take out yesterday's low? I don't know, but it's a very low probability. And taking out yesterday's high and low is about a 10% probability. So are we going to get down here? It's a great question. The only thing I got hanging out here that would make me think, and it doesn't matter what I think, remember that, is not to get yesterday's low, but to come down in here. So either we're going to come further down and get more longs out, and of course we can do anything. We can go anywhere. And you never know, a tweet, somebody trips over the cord at the CME, anything can happen. So I'm inclined for shorts, and I'll trade both sides. And what's important is not what I do. It's just a trade plan and just following your plan. And we all get bumped around because we're trying to get in alignment. And when we get out of alignment, we take a stop, or hopefully you're using a trade management process and have a discipline to at least get risk neutral so that if you do take a stop, and we all take full stops, just part of the thrill, that you scratch your trade. Because you may be zigging and the market is zagging, or you may be trading a directional concept and then you find out through change in behavior that it's a rotational concept, and then you're going to be out of alignment. That's just trading. It's just randomness. So for me, primarily shorts, a little squeeze here and there, I'm okay with that, or just take one side, looking to get why the market goes up to go down in all fractals and time frames. Where's the fuel? It's below me. Where's the news? It's in there. Buy the rumor, sell the fact. Friday was the rumor, today's the fact. Doesn't mean anything. It just means the market is lopsided and it needs to potentially rebalance. Does that make sense, guys? Chris used a link in the bottom of YouTube. There's a link there if you want to visit TraderLab. There's no cost for TraderLab. You won't be, you do have to confirm your Discord email keeps the riffraff and the spam out, which of course we want a good experience for all the traders who come to TraderLab, and also take advantage of the additional no-cost education. Stocks, options, crypto, order flow, with a high-tier tool like Bookmap, market maker behavior, swing trading, algorithmic behavior, on and on, options mechanics, all kinds of stuff. And of course, auction mechanics, what I do as far as market mechanics, building out trading plans, the business side. I focus on the business of trading. I shared 60 PDFs of structured trades you can reverse engineer. By the way, those of you who are looking for plug and play, doesn't exist, so don't do it. Don't think about it. What you need to do is come to TraderLab and find your groove. If you've been hopping from chats, which I think you could do for the rest of your potential developing career, you will run out of time and potentially run out of assets. So the thing to do is to find something you can relate to. And then what I found, and we all try to do the same things as we develop, is find something and then replicate it. That doesn't exist. What you can do is you can find something, then you need to actually tweak and tune it to your psychology. This is all about psychology. Now, these are actual trades I've taken with some explanations. And this incorporates a number of methodologies, but I say that by processes, mixed together. So these were never intended to be like a course. People were asking me, this is from 2020, what are you doing? So, okay, here's what I do. And so I put some things together. I also worked with Bookmap developers back then with ideas. And some of these have been incorporated now into what's called add-ons in Bookmap, other things you can add to the platform, and others have been jettisoned. And when you spend a lot of time doing research, like I have, doing this 46 years professionally and now out here with you, you kind of get to throw a lot of stuff in the round file. Fortunately, we all spend a lot of time trying to make things work that don't have an edge. So our support is here. Remember what the idea is. This is our outside edge. So what has it done? Let's just kind of look at it. Well, this was important. We know that. This is an auction. Too high, too low, too high, too low. Retail, too low. Then here, too high, too low, too high, too low. Retail, too low. Then what? Outside edge, too low. Retail. And where's too high? This is part of the thrill. So this is reversion trading. And you can kind of put these structures together. Notice what's over here. This guy, right? Notice where the buyers are. We don't see the liquidity. We see the absorption. Why does the market stop here and come back to here? Because this is the fair price. This is an outside edge. Notice what's going on here, and these aren't trade recommendations. The buyers that are here are there. So that means potentially back to there. That's all it means. Now, that's not tradable unless you have a shoehorn, or electron microscope. But what you can learn about this is all the nuances and the mechanics. So the buyers that were there and here are still here. That means if we don't fall out, and right now you see the liquidity coming in, and that can give us a potential skew to come here. And that doesn't mean it will. This guy pulls and this, or we get somebody drop a bomb on it. You can see there's always traders on both sides. We fall out the bottom, then we're back on this thing. Just saying. And then we have this potential micro support. Let me show you where it comes from. You see this? This is an auction. You see to the right, that little node sticking out? That's like your little volume point of control. It's the retail price. And where was the selling? It was there. So the buying is here. The selling was. So here you have the same structure. So the buyers are here. The buyers are there. The sellers were there. So let's put a little structure over this thing. Now, I know I'm getting a lot of lines here. It's going to make you nutty. But what I do with these is I just really want to bracket the auctions so I can see. So this is my retail price. If I break high and now my sellers were here, this is a trigger. Supports here and actually under here. So what's here? You see? Buyers are here. Where's my resistance? It's up here. My support is in here and here. So let's see what it does. So the idea of this is potentially to come back here, or, and I can only tell you what it might do, if I get back under this again, then I'm coming out here. So the market can come out here and then come back, or come over here. Now, my thing for the today is shorts, right? So, but hard because I need the range. This is my obstacle. So if I see buying, this is the obstacle for the longs. If I see buying, this is the obstacle for the longs. If I see buying, this is the obstacle for the longs. If I get selling under here, then possibly I'm going to come down to here and down to here. Now I have a sell sweep. This is rotational trading. It's like to throw a shoe at my monitor. It's just hard, you know, because you're trying to trade these rotations very hard. So let's see what we do here. So there's a sweep. I have, this is my high volume. It is sitting here. So I know this was a retail price in here that was too low. Is it still too low? This thing keeps going, then I have this one. And if I get under here, then I have my targets below. So let's see what it does. Now, remember me too. Little me, little you. Are you guys thinking about me too? Live action, what changes would I apply during economic releases? Well, I have a plan specifically for news, but I don't trade with known reports. I mean, if they're high tier, I just let the dust settle. We have trades all day in TraderLab. I mean, there's loads of trades. And unfortunately, and to me, I don't like to take a lot of trades. I'm been there, done that. I'm kind of at the other end. I like to kind of get a trade on and get the large rotation. I don't want to do this because I end up over trading. My broker sends me a gift basket. Thank you, sending the kids to to Florida for this coming winter. But I just try to position. So in this situation, my idea would be to try to get outside. If I trade what I perceive, now this is what's hard. What is the context of the market? The higher time frame is up, but we know the market is heavily long, so it's unbalanced. So the inventory is long. That means there's sell stops below us, which is kind of making me lean, short, but I just try to align. So, but it is two-sided, It's not like we have the bullet train here. So it's rotational. So the idea for me is just to try to trade the outside. Comes in here. Can't do anything here, but this is my resistance. You see? My resistance. Support is here. And I got this thing down here. So I use these things. If I'm sticking with, let's say, the short side, which is my thing for today, primarily, other than some other activities, I want to use these outside rotations for continuation shorts. And the primary reason for that, even though the trend is up, is that the market is long. Does that make sense? Think of it like fuel. And I built the trading system early on for myself, and I tell you, I even gave it a name. But it was Paper Chase, and it was Paper Chase, which is named after an old TV show. And because on the floor, we used to call it paper. Where's the paper? What's going on? And the stops, the market tends to trade the stops. So it was always rotation. So one of my early systems was 15-minute bars because it would give me the intermediate swings. And that was one of the earliest day trading systems I created. And it was based on 15-minute high lows. So, because even if the market was rotational, stops, and think about what 15 minutes is. There's 15, 30, 60, right? So a 15-minute rotation or high or low really is a fractal. So we'd go into the stops and then continue. So what happened over here? The sellers are here. What's above this? Buy stops. There they are. So if you go into the stops, so I would target, I was trading counter trend. So what I would do is if this was a down leg, I would take the longs into the stops. I would exit on the stops. So in many ways, I trade some of these same elements. I always am thinking about where's the stops, because that's how the market works. Where are the stops? They're right under here. There they are. What's on the other side? The stops. What's on the other side of this? The stops under here. And the stops are going to be under here. So are we going to get absorption? 413 stops. Thanks for playing. They get a coupon to the buffet. Is what's happening here. If I can come back, now I can revert back here, get the stops here, or, of course, part of the thrill is, if this is too high, then I come down here. So I can do the following. Squeeze, short, to there, get under there, then either back here or continue down and go on, continue with the short sequence. And I couldn't tell you what it's going to do. That's not my job. The idea of trading, guys, is alignment, you know. Ben, IBC, I can't tell you if it's an IBC or not. It's balanced. So IBC, I think we already been there, done that. I would not be shorting this, and it might fall out the bottom. This doesn't give you an edge because the stops are here, and this was support. So, you know, if you're getting involved here, this is what you got to deal with. There's just no, you know. Anyway, I can't initiate here. It doesn't mean it won't go down from here, because I am bearish on this thing. By bearish, I mean only in a short term, you know. Because I don't have a lot here. I mean, if I have to get under this, and then I'm looking maybe at this. Now, it's okay for me if I can get risk neutral, but I personally don't want to initiate this. And not a recommendation. This could be a fabulous short right here. I've got the sweep, so I have to be careful for coming back inside. It's a tricky day. So that's it for me. I don't try to force trades. I just, you know, I'm more interested in being in the business than I am in making trades. So the market can drop from here and keep going. If I don't have a way into it, then I just go, well, it's not my trade. You know, I just have to take a long, I think, you know, where that me too, little you that sits on your shoulder, all of our shoulders, is telling you, get in, do this, do that. That's all dopamine, adrenaline oriented, FOMO oriented, little you. Little you will take you out of the business. Longevity in this business is based on discipline and not really detaching yourself from this randomness and having a process that has edge. The market's always going to do whatever it's going to do, you know. So, and it doesn't mean that if somebody has an edge in this configuration that they don't take a short here, Ben. And it doesn't mean what I do and somebody else does has nothing to do with it. You know, I'm only here to share process and ideas. Each individual trader has to roll their sleeves up and figure out what works for them. I always suggest in TraderLab that when traders come to TraderLab that they have to really change their thinking. Most of us, you know, are looking for certainty. We're wired for it. You know, that reptilian brain, little me, who sits on my shoulder, you know, me too. Me too wants to be right. Me too needs, underlined, to be right. How can you be right in a business where it's random? So how do you measure right? What is right? We have to redefine that. And the profits are an outcome of doing what's right, not being right. And there's a huge difference between doing what's right. What's right? Waiting for your trade that has an edge. Where is it? That's your research. That's the time you're going to spend. And then you're going to actually have statistics. You're going to put metrics together, Ben, and then you'll know if this is your trade. Not if it's my trade, doesn't matter, or somebody else in TraderLab. We have traders in TraderLab who are going to be long, short, and whirling dervishes. We have other traders in TraderLab who put a trade on short, if that's the case, and still be short. So everybody's different. So how do you solve for this? All of us. We have to do the work and we have to do replays, screenshots, build a library of examples of specific trades, also find out why they don't work or when they don't work. Can you define? Now, everything is random, and the business model we use, and I think anybody in trading will use, who understands the business, is gaming. So casinos operate in a 100% random environment. The only thing that's not random is how they play their games. Everything else is random. So and it's a very successful business model. So if you extrapolate that model and you put trading in place of the games, if you will, then you only play games that have an edge. And then over time, even though you pay to gamblers, or we take losses, which let's assume it's paying the same as the casinos, we're going to extract dollars. But how do we get to that place? We have to know where the games are played when they show up. We have to have the discipline to take the trade or play the game, and be willing to take a stop to find out if we're going to extract the dollars this time from those gamblers or whether they extract it from us. If we have an edge, over time we're going to extract the dollars from the gamblers, same as the casinos do. So even though the gamblers walk out of the casinos with suitcases of cash, the casinos are still giving you the cocktails, the ticket to the buffet, building bigger casinos, comping rooms, flying big players in. How can they afford to do that and still pay the gamblers? It's no different than us. So it's not about them being right. The only thing you can measure yourself in this business is, do you have an edge and are you executing it? That's where Me Too comes in, because little me is going to be talking to me in my ear all the time. And if this comes up here, it's going to say you should have got out. I knew it was going to go higher. If it breaks from here, and so if you listen to little me and you get out and then it breaks down, then little me is going to tell you, gee, you should have held it. If it does this, I knew it was mean reversion. I should have got out. Which is it? Well, the only answer lies in your trade plan, not in what's going to happen right here. Little me is going to flip, like, as they say, a cat on a hot tin roof. Which way? Do you know which way? What's little me saying to you? Oh, there's absorption here, but my sellers are here. Which is it going to be? Better get out. Better get out. No, maybe I better get in. Maybe I better get long here. Or do I stay short? Do you hear it? Do you feel it? The quote, feel. That's little me. And in this case, it is little me, but who's asking you the question? Because in my mind, that's what little me is saying. That's the self-talk. That's little me. Oh, you better get out. No, you better stay in. What should I do? Right? Well, my plan answers the question, because little me is a moron. Little me doesn't know the business of trading, because little me is wired to avoid risk. The risk of giving back open trade profits and the risk of taking a loss. It's always looking to avoid the negative outcome and assuming the negative outcome. It assumes that you're going to be stopped out, so you look for certainty. You assume when you get in a trade that you're going to give it all back and take a stop. You better move your stop to break even. That's little me and little you. I hope that makes some sense, and I hope you're getting something out of this today. Yes, that's exactly right, Tom. Dr. Evil and Mini-Me from Austin Powers. Hope you guys got something out of today. If you're interested in this, use the link in the bottom of YouTube. Visit the TraderLab. There's no cost for it. Just confirm your Discord email. You won't be spam. Nobody, we're not interested in that. We just want to make sure you're real. Please give a like on the way out. Visit the TraderLab. The TraderLab's for everybody. It's a group of like-minded traders who come together to leverage their collective experience. It doesn't matter how long you've been trading. What does matter is that you're serious about the business and you want to get better. And also there's a library of webinars. Start with this one. It's got about 34,000 views. This one, Stop Gambling, Start Winning. Ned, thanks for curating this. Visit the TraderLab, say hi. If you're interested in potential sustainability, TraderLab might help you on your journey. Thanks again, guys. Don't forget to leave a like, and I look forward to seeing you guys tomorrow. Have a super day, and please trade with a plan. And if you're gambling, do it in the casino. Don't do it here. Thanks again. Have a great day, and don't forget the like on the way.